You can watch this newscast and others on demand exclusively on Time Warner Cable. TXA 21, as independent as Texas.
Well, a lackluster day on Wall Street. Today, the Dow finished with a loss of 3 points at about 13,540. The NASDAQ was up more than 9 points at the 2,588 level. And in minding your business tonight, although the market was a little down today, the Dow has risen sharply, as you know, in recent weeks, and is very near an all-time high. And it has, of course, many investors wondering exactly what chances and risks they should be making and doing in their investment portfolios right about now. Financial analyst and retirement expert Burk Rosenthal joins us right now. So, Burk, an amazing run Wall Street has had. Somewhat reminiscent, I don't know, I'll ask your opinion, somewhat reminiscent of the irrational exuberance, maybe, of 2000. I mean, it's been very high. What should folks be doing right about now, do you think?
Kenneth, in most cases, absolutely nothing. And what I mean by that is if someone has a portfolio that's exposed to the market, more than likely that portfolio is for their long-term goals. That would even include someone that's already retired, for example, taking income from their portfolio over a number of years. Well, if those goals are long-term, you don't necessarily want to be making changes based on where the market is right now. It would be very damaging if you make the wrong decision at the wrong time.
So don't be too precipitous. You want to move carefully and cautiously. Well, what about folks, because it has run up so high, what about folks who are afraid that, okay, it's too high, maybe it's about to end. You get in now, and of course, it dropped 30 points. What do you think?
You know what? There will be a setback. The problem is we don't know when that setback's going to be. It could be tomorrow, it could be next week, it could be next year or beyond. And so the main strategy that you want to make sure you're following is that your investments are properly diversified, that they're allocated appropriately, and that they're set up based on your individual circumstances, not based on what you think the market might do in the short term, because it's so unpredictable in the short term that that's usually not wise.
Well, it's really funny. One of the things you almost always hear from investment specialists, diversification, diversify, diversify, diversify. What exactly does that mean? How does someone know if they have the correct mix, if you will, of stocks versus bonds, et cetera?
That's the magic question. The problem is there's not a magic answer.
Oh, no.
But you want to make sure that your portfolio is set up based on your age, your goals, which includes your time frame, and most importantly, taking that into account along with your comfort level, or what we call risk tolerance. And all of those things need to work together to determine what your strategy should be.
It's funny you mentioned risk tolerance. As you move closer to retirement age, since that's also one of your specialties, how much risk should you be taking in times like this?
It depends on your circumstances. But I think the mistake that a lot of folks make is they forget that once they're retired, they may spend as many years in retirement taking income from that portfolio as they did working. And then you've got to worry about the effects of inflation. You want to be able to pay your bills 10, 20, 30 years down the road.
That's interesting. People are living longer. Well, Burk Rosenthal, once again, always a pleasure having you on. Thank you for that very sound advice. And if you want more information, you can always check on our website, TXA21TV.com.